This is a submission by Niharika Singh, a first-year PGP student of the Indian Institute of Management, Tiruchirappalli. For the purpose of the final project of the course, Indian Economy and Policy, the topic hereby selected is Issues and Challenges Faced by the Indian Banking Sector. To begin with, let's have a look at the structure of the Indian banking sector. It consists of 20 public sector banks, 22 private sector banks, 44 foreign banks, and 44 regional rural banks among others. As per RBI, India's banking sector is sufficiently capitalized, well-regulated and has been able to withstand the global downturn well. With the help of RBI's new measures and introduction of innovative banking models, restructuring of the domestic banking industry can go a long way. Here is a diagram that lays out the composition of the Indian banking sector. The central bank, that is RBI, is responsible for governing all the Indian banks, which are further categorized under scheduled and unscheduled banks. Now, we know that banks are the backbone of an economy and thus they should be financially healthy. This remains especially true for developing countries like India. However, Indian banks face a variety of issues that are categorized under different heads and explained in the upcoming slides. One of the biggest challenges faced by the Indian banks are a rise in bad loans or non-performing assets, NPAs, which pose at 2.36% of the total loans in the system. Together the figure for stressed assets is 10.9%. According to an IMF report, 36.9% of the total debt in India is at risk, but banks have a capacity to absorb only 7.9% loss. So, if these debts turn bad too, banks will face major losses. Another challenge would be the capital adequacy of the banks, which means how much capital they are left with after provisioning for bad loans. Now a falling CRAR is worrisome, and in the past few years it has declined for Indian banks, especially for the public sector banks. Another issue is that financing options for these banks are not so easy, and in case they are not able to maintain a certain level of capital as per RBI norms, then that could also pose some serious problems. The third challenge faced by banks are frauds, the intentional scams of funds involved. These frauds range from accounting frauds and demand draft frauds to fraudulent loans and check kiting, etc. Some examples could be frauds including fake letters of undertaking worth 11,000 crores committed by Nirav Modi. Another would be Vijay Mallya, who defrauded consortium of lenders for up to 13,000 crores rupees. Our government wants every household in the country to have access to a bank account, which means majorly rural India, which is a whopping 69% of our population. The problem is in the form of infrastructure incapacity. Our system does not have an adequate number of branches and ATMs in many villages where others don't have branches altogether. We don't have the infrastructure to reach the bottom of the pyramid, and there is a need for at least better supervision and monitoring. The rural branches are mostly running at a loss because of high overheads, and the small commercial bank branches are now faced with a new problem, a large amount of overdue advances to farmers. Government's decision to waive all loans to farmers up to the value of Rs. 10,000 crores have added to the plight of such banks. Banks face stiff challenges from non-banking financial intermediaries such as mutual funds, leasing and investment companies, and from foreign banks as well. This adds to their already existing long array of challenges and issues. After discussing the challenges faced by Indian banks, let's talk about some opportunities in the industry. Priority would be to target markets at BOP, which can be achieved by bringing digital banking in the rural sector. Peer-to-peer lending can be another opportunity that can help in increasing the pace of the whole lending process. Using emerging technologies such as blockchain, artificial intelligence, and big data will help in strengthening the entire banking process by providing more safety, speed, transparency, and much more facilities to the users. Here are some of the recommendations which can be used to, but are not limited to, overcome the issues that are faced by the banks. The first one would be digitization. Then more security and standardization, tougher PCA guidelines, privatization, and use of insolvency and bankruptcy code would also help. Another important recommendation is improved capital allocation schemes and reduced government injects. Lastly, here are the references that I used for the purpose of this video. Thank you.